So the next asset on our watch list is the cable markets, popularly known as the GBPUSD. So on the GBPUSD, at this juncture, you see what happened on Friday. We saw this engulfing bullish candle right here on Friday. And at this point, I want to consider the selling pressure that started this morning, appearing to be a sign that the pound sterling may be eating the brakes on its recent 3-day winning streak, entering a consolidation phase during the Asian session between the 1.273 and the 1.2700 area to emphasize the level of uncertainty at this particular point in time. At this juncture, the pound sterling stands at a critical point, teetering on the edge of a potential breakdown retest of that psychological support level at the 1.27 area, which appears to have already been broken. And if price remains below that structure, we could be seeing selling pressure fueled by a pessimistic economic outlook, and a breach below this key support zone could exert downward pressure on the pound sterling. Now, to navigate this pivotal moment, market participants will keenly watch for insights from the upcoming British Retail Consortium, that is BRC like-for-like retail data. We have it coming up tomorrow here on the United Kingdom economic calendar, and we also have the manufacturing production data due on Friday too as well. And these releases are expected to provide fresh impetus and clarity on the United Kingdom economic landscape. So in light of these developments, we will be looking at structures that will be guiding our positions for this week. And to do this, let's scale up into the daily time frame and let's look at what things are looking like from an holistic perspective. Now, on the daily time frame, I took into consideration trading activities since the month of October, and it's quite clear that price was bullish in the last 4 to 5 months, giving us the ascending trend line you can see on your screen right now. In fact, I have a couple of them, but this one highlighted in red is the major one right now, since this is where price is close to. Now, in addition to this trend line, I did identify my key level for this week at that psychological zone at 1.272. And in fact, you can see how this level, or let's say the zone between the 1.272 and the 1.28250 area has been a strong selling niche in this market in the last 5 months. And as a result of this, I did identify this area as a supply zone. And if you look at since the mid-month of December, I think since the first day of December, we saw how buyers have been struggling to break through that area, though there was an attempt which was a little bit successful here, but we saw sellers still continue to maintain their ground around that area. The same thing happened here, and last week price closed around that level, and in fact we are right back into that particular area, making it a further crucial area to look out for trading opportunities. So as we head into the new week, what are we going to be doing here? The question at this juncture is, will the ascending trend line here continue to maintain the bullish bias? That is, if price remains above both the ascending trend line and the key level, we definitely want to be looking out for patterns and structures that supports the idea of selling. But if price breaks down the ascending trend line, we might start considering selling, maybe into this other trend line here to incite a bullish momentum, or in fact break it down to the downside to incite a sell-off. Now, in order to guide our position, we have a simple trading setup on the 4 hours time frame, which I would love to share with you. So on the 4 hours time frame, it's an ascending trend line duly marked out here. Price remains above the ascending trend line, hence we look out for opportunities to buy this asset. Now let's zoom right into the current structure, and since the second half of last week, you will see how price action has been confined within the 1.272 and the 1.26150 area. But one interesting thing about the structure here is the fact that price still remains above this ascending trend line, opening up the idea or maintaining the idea that buyers still have a say in this market. And if we are going to consider selling the GBPUSD, I would rather see a breakdown of both the ascending trend line and the 1.2615 to join a bearish move. Now, with this information we have gathered here, let's see how the market has been reacting to the 1.272 since the beginning of this week. Now, scaling down into the 1 hour time frame, we begin to see things very, very clearly. So right here on the 1 hour time frame, let's see what is going on. Okay, so on the 1 hour time frame, we saw how at the beginning of the week, though the week started on a bearish note, but our price remained oscillating around that key level to further emphasize the importance of that this zone. So as it is right now, we have a range to guide our trading decisions, as price was confined within the 1.273 and the 1.27 area for the first 7 to 8 hours of the week before we saw the breakdown of the structure. So I had a breakdown move as soon as price moved about, how many pips was that? About 25 pips. I moved my stop loss to break even. So at this point, I got taken out from this sell position. Now, how do we intend to position ourselves for the next move? Well, if you look at this structure, considering the impulsive move that started on Friday of last week trading session, we could be seeing this bearish momentum we see here could be a retracement of that impulsive leg, where instead what we want to be looking out for is where it is likely for this retracement phase to end to incite an uptrend continuation. Now, if we bring out our Fibonacci retracement tool, run it through the previous impulse leg, we should be having an area between 50 and 78.6%, which appears to have been tested at this point in time. So since price has tested this area and we continue to see buy pressure around this area, we might likely be seeing an uptrend continuation pattern. Now, in addition to that, one is this descending trend line here after capturing the lower high since last week Friday. Price breaking out and retesting this trend line will further emphasize the strength of the buyers. But for me to feel very comfortable here, I would rather want to see price break out the 1.23. That's the highest point price action has been for this week to get me ready for another wave of bullish momentum. But before the breakout happens, we could see opportunities of joining that bullish momentum. If we can see significant structures like higher highs and higher lows, then we can actually be part of that uptrend move. So I encourage us all to mark out this level. However, in as much as things are looking bullish, we cannot ignore the potentials of sellers. And as it is right now, we already have a breakdown of the support line and prices back into the structure. So I would advise you have a sell stop order below the 1.2700 level to capitalize on the bearish momentum. So let's keep this in mind. If you have any questions, feel free to let me know in the comment section.